Hello and welcome, grade 12 accounting learners, from myself, Mahesh Lal. Are you guys ready for another accounting lesson? Yes, you are. Let's start. Let's look at what we're going to be focusing on in today's lesson. We're going to be looking at manufacturing accounts, and our key focus will be your production cost statement as well as the break-even analysis calculation. Now guys, before we start with a question, what I'd like to do is look at the duties of an accountant working for a trading business versus the duties of an accountant working for a manufacturing business. So let's just put that on. So we want to look at the accountant for a trading business versus an accountant that works for a manufacturing business. Right, let's start first with our trading business. Now remember guys, in grade 8, you learned that a trading business is a business that buys goods in order to sell. They buy trading stock and then obviously they sell that stock to their customers. So let's take an example of a trading business, for example, Spar. Right, now guys, we know that Spar sells a number of products, and I've actually got a product here that Spar does sell. Let's take our chocolate. I've got an Aero chocolate. So Spar obviously will buy this chocolate and then they will sell it to us, the consumers. Now, when Spar buys this Aero from Nestle, they will pay a cost price. In other words, the price for purchasing this chocolate could be, and guys, I'm just assuming, let's assume it's an amount of 3 Rand. That is, like I just mentioned, the cost price that Spar will pay to Nestle for purchasing this product. Spar will then add on what we call a markup to your cost price. So instead of selling it to us, the consumers, at 3 Rand, and how we wish they would sell it to us at 3 Rand, but we know that won't happen, they might sell it to us at an amount of 7 Rand, which we term as the selling price. Okay, you guys with me? Cost price is 3 Rand and the selling price is 7 Rand. Now, that is the way in which a trading business will operate. They will purchase stock, mark up their stock like we saw for this chocolate, and sell it at a specific price. Let's now look at our manufacturing business. Let's look at how different the manufacturing business is from your trading business. I just want to change the color of my pen. Okay, so a manufacturing business, we now are responsible for making the product. So let's assume we are Nestle, or we are the accountants for Nestle. So no longer Spar, but Nestle. Nestle will obviously first make the product, and once they've made the product, they will then sell it to their customers, and Spar would be obviously a customer, Pick n Pay, Woolies, etc. So they have to first manufacture or make the product before they can sell the product. Now, this is where the accounting procedures or the accounting records are going to be slightly different, because in order for us to make the product, there's going to be certain costs that the firm or the business is going to incur. Now, let's look at some of the costs to make your Aero. Firstly, we obviously need a whole lot of ingredients. Now guys, I'm not sure what ingredients are used to make an Aero chocolate, but I'm assuming it has to be lots of milk, cocoa, sugar, some cream, etc. So all of those items put together obviously go directly into the making of this Aero chocolate, into the product itself. And in accounting, we term that as your direct material cost. In other words, the actual raw materials that goes into the making of the product. So we've got our raw materials, which I just mentioned for this product, would be your cocoa, your sugar, your milk. And in accounting, the raw materials that is used is referred to as your direct material cost. Okay, guys are with me? Right, let's now look at what else goes into the making of the product. In other words, the costs that are involved. So we've got our raw materials. Now, apart from the raw materials, we obviously then need people. We need our workers to make this chocolate. So those workers that are working in the Nestle factory and are busy manufacturing this Aero, whether it's switching on machines or physically putting in ingredients into a mixer, you name it, our factory workers is what we term as our direct labor cost. So all the people or the workers in the factory, your factory workers is what we refer to as my direct labor cost. So we've got direct material cost, which involves our raw materials, and then we've got the workers. The cost there is called our direct labor cost. Right, why the use of the word direct? Direct because it goes directly into the making of the product. Now, apart from these two costs that I've just discussed, let's just extend the page there a bit, guys. Apart from these two costs that I've discussed, there could be other factory expenses that the business would have to incur. So, for example, if Nestle had to pay for water and electricity for the factory itself, if Nestle had to pay for rent, let's assume they don't own the building, but every month for use of the factory, they have to pay rent. That would be another cost that they would obviously incur. They would obviously have to provide for depreciation on their factory equipment. They might have to pay for the salary of the foreman in the factory itself. Remember, the foreman doesn't directly make the product, so that can be referred to as an indirect cost. Another expense that I can think of is insurance for the factory. So apart from the two costs that I've just mentioned, they could be other factory related costs. Okay, factory related costs, and guys, I can't write all of them down, but in accounting, or when we're doing manufacturing accounts, we group together all of these other factory-related costs, and we call them manufacturing overheads, or some textbooks refer to it as factory overheads. So let's write that down. Our factory overheads. Overheads, guys, is just another word for cost, or we can call this manufacturing cost. Right, once we've got these three costs calculated, in other words, we've got our direct material cost, our direct labor cost, and our factory overheads, we then get what we call our total production cost. Now, remember, right in the beginning, the question that I asked, or what we were discussing, was Nestle has to manufacture the product or make the product. So if I'm going to make the product, I obviously need to calculate how much it's going to cost me in total to make the product, and then I can work out what I'm going to sell the product at. So once I've got these three costs calculated, all I'm doing is adding up my three costs. So for example, let's assume in total, my production costs come to 5,000 Rand. I've manufactured 2,500 Aero chocolates. So 5,000 divided by my 2,500, and I can now work out that 1 euro chocolate will cost me 2 rand to manufacture or make. And the moment I've got this 2 rand, guys, I've got my cost price. So once I've got my cost price, I can obviously then add on a markup and then sell these chocolates to Spar, Pick n Pay, Woolies, etc. Okay. Right, I hope you guys are with me. I hope that intro helped a bit. I think we're ready now to start with a question, a typical exam type question on manufacturing accounts. So let's now go for it. Let's start with this question. Right, guys, our first question. You are provided with information, balances, transactions, and adjustments. So our information is made up of balances, transactions, and then adjustments relating to Fatima Manufacturers, and it's owned by Fatima Falla. The business manufactures shoes. So always, guys, highlight the product that the business makes or manufactures. In this case, this business makes shoes. We are required to 1.1 calculate the value of the raw materials that were issued to the factory for the year ended 28th Feb 2010. And then they go on to tell you, you may prepare the raw material stock account to assist with your calculations. All right, let's look at the next part of the question. 1.2, prepare the following notes to the production cost statement. Production cost statement for the year ended 28th Feb 2010. So let's look at what notes we need to complete. Direct labor cost is one of the notes for 5 marks, and then factory overhead cost is the second note that we have to prepare. And then, like with most questions, 1.3, prepare the production cost statement for the year ended 28th Feb 2010, and this is for 10 marks. Okay, 1.4 is our calculation question, so I'm just going to make a note there. This is where we need to do some manufacturing calculations. You are provided with unit cost and the break-even point calculated for the past 2 years. So for 2010 given to us, 2009. This is obviously our previous year. Just going to make a note of it as we're reading. 2010 is my current year. Okay, so what do I have? I've got raw material costs per unit. In other words, to manufacture or to make 1 pair of shoe, what is the raw materials that I require, or what is the raw material cost? Then I've got direct labor cost also per unit. Factory overhead costs per unit also given to me. Then break-even point. Guys, we're going to get to this a bit later, where we're going to discuss this in much detail. And then number of units produced. In other words, number of shoes or pairs of shoes that this business has produced. For 2010, they've produced 20,000 units, and 2009, 24,000 units. So there's obviously been, if we compare the units, there's been a decrease or a drop in production. Right, let's now go to the rest of the questions. Okay, and guys, the rest of the questions relate to this information. I'm not going to read it just yet. What I want to do is look at the information that they've given me first. So still with the question, we haven't started with it as yet, but let's now look at our information. Information given to me is firstly opening balances on the 1st of March 2009. Opening balances, remember guys, this refers to the beginning of the financial year. So my raw material stock at the beginning of the year, I've got a stock of 160,000. Then I've got work in progress stock. Now remember guys, in manufacturing, you're going to have raw material stock, work in progress, and then you're going to have finished goods. Raw material stock would be, in this case, for example, the leather that is used to make the shoes. That would be regarded as your raw materials. Okay, so I'm just going to write that down. That would be an example, would be the leather that you purchase to make the shoes. Then work in progress stock. This is where we take the leather, we probably take the glue, we take whatever else, and we start making the shoe. So the shoe is not completed as yet, but is work in progress. In other words, it is nearly completed, or you've started with it, or something of that sort. Finished goods stock, this is obviously where the actual shoes has now been manufactured or made. So this is your completed item. Okay, the completed pair of shoe. Then we've got consumable stores stock, and you've got their factory. Consumable stores stock is an indirect stock item that is used, and in the case of shoes, such an item could be, guys, maybe your glue in order to maybe stick the heel. I really don't know how shoes are manufactured, but it could be the glue or the shoe polish that is used at a later stage. So it's an indirect product, an indirect item that is used in the making of the shoe itself. Then we've got factory, plant and equipment at cost given to us, accumulated depreciation on factory, plant and equipment. Right, next bit of information, summary of transactions for the year ended 28th Feb 2010. We've got purchase of raw materials on credit. Now guys, raw materials obviously refers to my direct material cost. It's going to help me to calculate direct material cost. Then I've got carriage on purchase of raw materials. Again, this is going to assist me with calculating direct material costs because it deals with raw materials. Then I've got consumable stores purchased for the factory. This is an indirect cost. So this relates to my factory overheads. Cleaning materials purchased for the office. Right, guys, it has nothing to do with the factory. Now remember, anything that does not deal with the factory cannot go into my production cost statement. So cleaning materials purchased for the office, I'm just going to put a little star there. I might need this information, I might not need this information. Factory, plant and equipment purchased on the 1st of September 2009. So this is a purchase during the financial year. I've purchased additional equipment for the factory. Then I've got production wages. Production wages refers to the factory or the workers in the factory itself. So this will affect my direct labor cost calculation. I've got UIF contribution for factory employees, and this is not given to us. But remember, guys, UIF is normally 1% of your wage or your total wage itself. Then I've got salaries for the factory foreman. So this is going to affect my factory overheads because it's for the factory foreman. Salary for administration. Administration has absolutely nothing to do with the factory. It's an office expense. So again, a little star there. I don't think I'm going to need that info. And then your salaries for your sales staff. Again, sales staff has nothing to do with the factory or the making of the product. So again, I doubt I'm going to need that bit of info. Water and electricity is given to me. Then I've got my sundry expenses. Sundry refers to other expenses relating to the factory. So that is a factory overhead. Sundry expenses relating to administration. Again, doubt I'm going to need that info. And sundry expenses dealing with the sales department, I also am not going to need that information. Right, next bit of information, our closing balances on the 28th of Feb 2010. 28th of Feb, guys, 2010 refers to the end of my financial year. So I've got raw material stock. In other words, these are items that were not used at the end of the year. So I've got a balance for raw material stock not used, work in progress, the amount is missing, not given to me, finished goods stock, in other words, stock that was obviously sitting in the warehouse, not yet sold, and then consumable stores stock for the factory, 7,000, and I just make a little note here that this is going to help me calculate my factory overhead. Right, next bit of info. Additional information and adjustments. Additional information A, no entry was made for the transport of raw materials by POP carriers. Now again, guys, can you see the word raw materials? So this adjustment is going to assist me with my direct material cost. Information B, during the physical stock taking of raw materials on the 28th of Feb 2010, so this is at the end of the year, a calculation error was made. 6,000 articles at 15 cents each were taken into account at 50 cents each on the stock list. This must be corrected. And all I'm doing, guys, is a calculation error has been made for raw materials. So again, not going to really read the entire adjustment, but just make a little note. It's going to affect my direct material cost. Adjustment C, no entry was made for the following in respect of the production wages for the last week of Feb 2010. And again, guys, I'm really not going to read any further, but I'm just going to make a little note here. Production wages obviously affects my direct labor cost calculation. Adjustment D, an amount of 4,200 Rand was still outstanding on the water and electricity account. We spoke about this in the intro itself. Water and electricity will be an indirect cost relating to the factory, and all other costs relating to the factory goes into my factory overheads or manufacturing overheads. Adjustment E, depreciation on factory plant and equipment. Again, this deals with factory overheads. Depreciation is an indirect cost that needs to be taken into account when I'm calculating my factory overheads. Next bit of info, F, during the year 20,000 pairs of shoes were manufactured. So we had this information earlier on. Adjustment G, the shoes are sold at a markup of 65% on cost. I'm going to underline that because I might need that info. And then the very last bit of information, H, the shoes are sold at 198 Rand per pair. And I'm going to make a note here, it's sold at 198 Rand, which means this is obviously my selling price. Right, guys, I know I've read through the entire question, but remember, it is absolutely vital that you do that at the start. Read through the question, highlight, underline, make a bit of notes as you're reading, and then you know that when you start with the question, you've obviously read through everything. You're not going to forget to take certain things into account. Right, guys, let's now start with the question, so let's go for it. Right, 1.1, we're required to calculate, let's get our pen there. We're required to calculate the value of raw materials that were issued to the factory for the year ended 28th Feb 2010. And then they tell you, you may prepare the raw material stock account to assist you with your calculations. And this question for 7 marks. Right, guys, remember, with a question like this, you can use a ledger account or you can use any other calculation that you are comfortable with. Now, as accounting students, most of you are comfortable with ledger accounts, so let's now use the raw material stock account as a method for our calculation. Right, your raw material stock account, go back to basics. Stock is obviously an asset to the business. On the debit side, we all know our assets increase. On the credit side, our assets decrease. All assets obviously have an opening balance at the beginning of the year or the beginning of the month. We are looking at the beginning of the year. So at the beginning of the year, let's bring down our opening balance. How much of raw materials did we have in the factory at the beginning of the year? So let's go to our info. And we're going to the information right at the beginning where we've got opening balances on the 1st of March 2009. So at the beginning of the year, we've got raw material stock worth 160,000. So let's take that information through. Our balance at the beginning of the year, an amount of, let's get the pen back, 160,000. Right, guys, let's look at when will this balance increase? In other words, when will I have more raw materials in my warehouse or in my storage room? Every time the business purchases raw materials, so picture for a moment, in the storeroom we've got 160,000 Rand worth of leather. Every time I buy more leather, I'll obviously have more leather in that storeroom. My raw material stock balance has to go up. It has to increase. So let's now look at our purchases for the year. Did we buy additional raw material stock during the year? So back to our question and our summary of transactions. Purchase of raw materials on credit. So for the year, we bought raw materials to the value of 1,023,475. So let's take that info through. So creditors control, because we bought on credit, an amount of, guys, it was 1,023,475. Right, so we've recorded our purchases on the debit side. Let's now look at what else will appear on the debit side. Now, apart from purchases, every time we pay for carriage on purchases, every time we pay for transporting the item to the factory, the value of our raw materials should go up. It should increase by that transport cost that we've paid. And we know in accounting, we refer to those costs as our carriage on purchases. So your carriage on purchases, back to your question, carriage on purchases of raw materials, an amount of 22,500. So let's take that through. Okay, and guys, I'm going to actually put this amount in brackets because we've actually had an adjustment on carriage on purchases. So we've got an amount of, let's just go back there, 22,500. So 22,500, and I'm sure there was an adjustment on carriage on purchases. Let's just find that adjustment. So back to your question. Okay, additional info, that's where I remember reading this. Yeah, there we go, adjustment A. No entry was made for the transport of raw materials by POP carriers to the factory, 3,750. So this is obviously additional raw materials, or the carriage on purchases for this particular raw materials, and the carriage was an amount of 3,750. So let's take that through. So we are adding plus 3,750. So let's get our calculators out, guys. So we've got 22,500, and to that we're adding this additional carriage, 3,750, to give us a total for carriage and purchases, 26,250. So let's write that down, 26,250. Right. Let's now carry on, guys, with our calculation. So we've recorded our purchases, we've recorded our carriage and purchases. Now let's look at our balance at the end of the year. Now remember, guys, what's the objective of this question? We're trying to calculate how much of raw material stock was used in the making of the shoes or the product itself. So we've recorded all our items on the debit side. On the credit side, every time we use our raw materials, the balance obviously decreases, and that's what we're trying to calculate. What was the direct material cost? How much of raw material stock was actually used by the business? So we've got our balance at the end of the year given to us, so let's go to that info. Okay, there's our closing balance on the 28th of Feb 2010. Raw material stock had a closing balance of 259,125. So let's take that through to our T account. Okay, so our balance in brackets, because again, I know that I came across an adjustment for this balance. So let's bring down firstly that amount of 259,125, and let's now go to our additional information. Guys, if I remember correctly, I'm sure it was additional information B. Let's just quickly find that. Yeah, there we go. During the physical stock taking of raw materials on the 28th of Feb 2010, a calculation error was made. 6,000 articles at 15 cents each were taken into account at 50 cents each. So there's the error that was made. The stock was valued at 15 cents each, but instead of valuing it at 15 cents, we by mistake valued it at 50 cents. In other words, we overvalued our stock by a difference of 35 cents. So remember, guys, when you overvalue something, you've obviously have to subtract in order to fix this error. This must be corrected, and like we mentioned earlier on, it's affecting our direct material cost. So let's firstly do our calculation. So we've got an amount of 35 cents. Let's just clear that quickly. Okay, so we've got 35 cents times number of articles. I think it was 6,000. There we go. An amount of 2,100. Your stock was overvalued by this amount, 2,100. So let's now go and adjust. Okay, so we are adjusting. We obviously going to subtract because we've overvalued our closing stock by this amount. So minus 2,100. And again, let's get our calculators out. Let's just move this a bit. Okay, so we've got an amount of 25,925, and we are subtracting 2,100 to get our correct closing stock, quite an amount of 257,025. So let's enter that in, an amount of 257,025. Right, guys, almost at the end of this question. Let's now look at our direct material cost, how we're going to calculate our direct material cost. The best part about T accounts is if you've got a balance brought down, an opening balance, as well as a balance carried down, it means that our debits must equal to our credits. Something that you learnt when you did accounting in grade 8 or whether you did it in grade 10. So if I need to calculate my direct material cost, in other words, this amount here is my unknown, I'm calling it X for now. All I'm going to do is add up everything on the debit side minus what I've got on the credit side to give me this unknown amount, my direct material cost. So let's get our calculators out again, and let's just move this a bit. So on the debit side, we've got an amount of 160,000. To that, we are adding 1,023,475, We are then adding 26,250, and then we're going to subtract the item that we've got on the credit side, this amount that we've just calculated, 25,000, sorry, not 25,000, but it's 257,025 to get the direct material that was used to make these 20,000 pairs of shoes, an amount of 90, guys, let me just say that one more time, 952,700. Okay, so our X, our direct material cost is an amount of 952,700. Okay. Right, happy with that. We've got the first part for our production cost statement, our direct material cost. Right, guys, let's move on now. Let's look at the second question, where we've got to prepare some notes. Let's just find that quickly. There we go. The first note that we've gonna have to prepare or complete is our direct labor cost. So in order to calculate our direct labor cost, remember guys, this refers to the wages that was paid to your factory workers, as well as any other expenses relating to the factory workers itself, such as UIF. You could get even pension fund, even maybe medical aid fund. As long as it relates to the factory worker, it's going to form part of our direct labor cost calculation. Right, so in this case, from the information that we read, our direct labor cost can be calculated by adding our production cost plus our UIF contribution. That was the only additional cost apart from our wages. So let's start with our production cost. So let's go to our info, your production cost, summary of transactions. So we've got production wages, an amount of 723,800. So that was our factory workers' wages in total. So let's take that through. Okay, so production wages, open brackets, you've got this amount of 723,800. All right, did we come across an additional adjustment? Yes, we did. So let's go to that additional adjustment. Our additional adjustment was, I think, on the next slide. There we go. No entry was made for the following in respect of the production wages for the last week of Feb 2010. The entry was omitted from the wages journal, and you've got here your gross wages 6,200, and then below two deductions, unemployment insurance fund, and then you've got PAYE as your second deduction. Now remember guys, you often see this adjustment when you completing an income statement for companies. You often come across this one. Now, in terms of what do I take from this adjustment itself, remember guys, you are looking at your expense. You are not looking at liabilities, but rather expense. So the business expense would be your gross wages. There we go, gross wages. So the amount that was left out would be 6,200. So let's take this amount through, because remember, we are only looking at expenses in terms of your production cost statement, in terms of your direct labor cost calculation. So that 6,200 is now going to increase my production wages. So I'm now adding my 6,200, and again, let's get our calculators out. Okay, so we've got this amount of 723,800. We're now adding the amount that was omitted or left out, 6,200, to get our production wages 730,000. So let's fill that in, guys. 730,000. Right, we then had a UIF contribution, and I remember mentioning this to you guys at the beginning. UIF is normally 1% of your total wage. So let's now calculate our UIF. All we're doing, people, is our total wage, which we just calculated, 730,000 times 1%. To get us, okay guys, I'm sure I did something wrong there. Let's just start over. There we go. Okay, so we had an amount of 730,000 times 1%, and that will give us our UIF 7,300. So let's enter that. Our UIF, our additional expense, is the UIF 7,300. Okay, and all we've got to do now, guys, is add up. So 730,000 plus 7,300, that should give me my direct labor cost and amount of 737,300. Okay, done with the second question. Right, guys, I think what we should do is let's take a quick break. You guys go for a walk, get some fresh air, and when you come back, we will carry on with the factory overheads and then complete our production cost statement. We'll be back soon. Welcome back, guys. Before we went on our break, we were busy looking at your production cost statement, and we've already completed our direct material cost calculation, our direct labor cost calculation, and now we're going to move on to our factory overhead cost calculation. So let's get started with factory overheads. Right, remember people, factory overhead costs, this simply refers to your other factory expenses that the business is going to incur while they're manufacturing shoes. So we've got factory overhead costs. The first item is the salary of the foreman. So let's go to our question. And we're looking at the summary of transactions. There we go. Summary of transactions. Under salaries, we've got factory foreman and his salary an amount of 150,000. There was no additional adjustments in terms of the factory foreman. So let's take that amount through. So we've got salary for the factory foreman an amount of 150,000. Then the next cost is our consumable stores for the factory. And remember here, the example that I gave you guys was an item such as glue could be considered to be consumable stores. It's an indirect material that is used in the making of the product itself. Now, in order for me to calculate my consumable stores that was used in terms of the making of the shoes, I'm going to give you guys a very simple formula that will work with more or less almost any question. The formula that you should use is take your opening balance for your consumable stores, add purchases for the year, additional consumable stores that you bought during the year, add any carriage that you might have paid in terms of transporting this consumable stores, and then finally subtract your closing balance or your closing stock for consumable stores. I'm going to say that one more time, guys. I'm going to take my opening balance for consumables. I'm going to add my purchases. I'm going to add any carriage that I might have paid, and I'm going to subtract my closing stock or my closing balance. Right, let's start with this calculation. Let's start firstly with your opening balance. So back to the question, and we're looking at information at the top. My consumable stores stock opening balance, I started off with 6,000 Rand worth of stock at the beginning of the year. So let's bring that through. So consumable stores opening balance, guys, I just want to change the color of the pen here. So open brackets, 6,000. To this, I'm now going to add my purchases. So back to my info, summary of transactions. Consumable stores purchased for the factory, 43,000. So let's take that through. I've purchased stock or consumables for an amount of 43,000. Then let's now look at carriage on purchase for consumable stores. Are there any carriage? I don't think we came across any, but let's quickly check. So I've just got carriage and purchases of raw materials, but none for my consumables. So carriage on purchase, there isn't any, which leaves me with my closing stock. So let's go to our closing stock info. Closing balance at the end of the year. Consumable stores stock, leftover stock, in other words, stock that was not used, 7,000. So let's take that through, an amount of 7,000. And remember, my closing stock I need to subtract, so minus 7,000. Right, let's get our calculators out and let's calculate how much of consumable stores was used. So I'm starting with 6,000, I'm adding 43,000, and then I am subtracting that amount of 7,000 to give me my consumable stores that was used, 42,000. So let's take that amount through, 42,000. Okay, now remember, guys, a calculation like this, you've got to show it in brackets because it obviously carries lots and lots of marks, close to 4 marks for this calculation. Right, next item that falls under my factory overhead costs is my depreciation. So your depreciation calculation, people, you've done this a million times when you're doing an income statement. Not a difficult calculation at all. Let's just go through it in terms of your depreciation on your factory plant and equipment. So let's go to our info. Okay, my information at the beginning of the year, there we go. Factory plant and equipment at cost, 2,225,000. Then I've got accumulated depreciation on factory plant and equipment, 450,000. Okay, so I'm obviously going to need these figures. Let's just read on. Then during the year, factory plant and equipment was purchased, and it was purchased on the 1st of September, 250,000. So I'm going to need this bit of info as well. And then additional information. Let's find it. There we go. Depreciation on factory plant and equipment must be brought into account at 10% per annum according to the diminishing balance method. Remember, guys, diminishing balance method, you learned this in grade 10, is my cost minus my accumulated depreciation. Right, taking all of this information into account, let's now calculate our depreciation. So let's go back to our answer sheet and let me just extend the page. Okay, my depreciation. I obviously have old factory equipment as well as new factory equipment that was purchased. Let's start with the calculation for my old factory equipment. So again, guys, I'm going back to the info. Okay, so my old factory equipment, in other words, before I purchased, my factory plant and equipment had a cost of 2,225,000, accumulated depreciation 450,000. So let's get those calculators out and let's calculate your depreciation. Remember, we're taking cost minus accumulated depreciation. Okay. We're going to subtract our accumulated depreciation of 450,000 to get a carrying value of 1,775,000. We are then going to times this by 10% because we're depreciating by 10% to get a depreciation amount of 177,500. So let's take that through. Okay, so our depreciation 177,500. Right, depreciation on the new equipment that was purchased. I'm just going to quickly, guys, plot a timeline. Financial year starts on the 1st of March 2009, ended on the 28th of Feb 2010. Let's just quickly go to our info and check when did we purchase this additional equipment. So we're going to additional information. There we go, additional information. It was purchased on, no guys, not additional info, summary of transactions was what I should go to. Okay, so factory, plant and equipment purchased on the 1st of September 2009 for 250,000. Okay, so this was purchased. Let's just change the color of the pen there, somewhere here. 1st September 2009, which means because it was purchased on the 1st of September, we've only used this equipment for this time frame. And if we count, guys, 1st of September to the end of Feb is a time frame of 6 months. So we only can depreciate this new equipment for 6 months. So let's take our cost. Our cost was an amount of, guys, I have to go back to the question. Our cost, 250,000. Okay, so we're taking the cost, 250,000, times my rate, which is 10%, times the number of months I need to depreciate, which is for 6 months, 6 over 12, to give me, again, my calculator. So 250,000 times 10%. Okay, and it's for 6 months. I'm dividing it by 2 to get depreciation on this new equipment, 12,500. So let's write that down, 12,500. Right, guys, so there's our depreciation. Remember, try and show your calculations in brackets. I'm going to use this amount, 177,500, and I'm going to add my 12,500. You guys have done this a million times, I'm sure, when you did an income statement. So I really don't want to spend too much of time on this. So let's go to depreciation, open brackets. We are adding 177,500 plus my 12,500. Okay, so my total depreciation plus 177,500. If I just add up those two amounts, guys, I'm getting my total depreciation 190,000. So let's fill that in, 190,000. Again, people, bracket work, absolutely important, because if I've made a mistake in terms of my 12,500, I can be assured of getting 1 mark at least for my 177,500. Right, back to our factory overhead costs. So we've looked at 3 costs thus far. Let's now look at water and electricity. So again, going back to your question, your water and electricity was a total of 163,000, but then we've got additional information. So we've got additional info, D, okay, that tells us an amount of 4,200 Rand was still outstanding on the water and electricity account. Remember, guys, still outstanding. This is obviously an accrued expense. And you've learnt accrued expenses form part of the financial year and therefore needs to be included. Included meaning I need to add on this 4,200 Rand to my water and electricity. 60% of all the water and electricity was used in the factory. And remember, I'm trying to calculate what was used by the factory itself. So I've got there 60% was used in the factory. So what I'm going to do with this adjustment, guys, I'm going to first add on my 4,200, and then I'm going to calculate 60% on that total to take it to my factory overheads as my expense for water and electricity. So let's do that, and we're going to actually, I'm going to use this bit of space here to do the calculation. Okay, so my water and electricity is an amount of 163,000. So let's just take that through. Okay, so water and electricity, 163,000. I now must include my accrued expense. So I'm adding on 4,200. And then only 60% of the total cost was used in the factory, and that's what I'm trying to calculate. So I'm going to multiply this then by 60%. So let's do that. Let's get our calculators out. Okay, so we've got your water and electricity, an amount of 163,000. We are then adding our 4,200. Okay, and then we're going to calculate 60% to get an amount of 100,320 was that portion of the expense that was obviously for the factory. So let's take that through. Okay, so my water and electricity account. Again, guys, make sure you show your calculations in brackets, an amount of 100,320. Okay, right, very last item that's going to fall under factory overhead cost is my sundry expenses. And I think this was very straightforward. Let's go to your summary of transactions. You've got sundry expenses for the factory, an amount of 194,680. So this amount here, people. All I'm doing is taking this amount through because there was no adjustment or additional information. So let's take it through. My sundry expenses, an amount of 194,680. Okay, guys. Right, almost done with my factory overhead costs. All I've got to do now is add up. I need to total. So let's get those calculators out. So we've got 150,000 plus my 42,000 plus 190,000. And then I'm adding 100,320. And then finally my sundry expenses, which was 194,680. to give me my factory overheads, an amount of 677,000. So let's fill that in. Factory overheads, 677,000. Right, guys, I've got my three costs that I spoke about right at the beginning of the session. I've got my direct material cost, I've got my direct labor cost, and I've got my factory overheads. So now I can calculate what was my total production cost. In other words, I now need to complete my production cost statement. So let's do that. That is the next bit of our question. 1.3, prepare the production cost statement for the year ended 28th Feb 2010. Right, my production cost statement, guys, it's just a matter of now filling in figures. So we're starting off with my direct material cost. The calculation was previously done, so let's go back to that calculation. Your direct material cost was calculated at 952,700. So let's take that through. Okay, your direct material cost, an amount of 952,700. Right, next item is my direct labor cost. Again, I've done this note. So let's go to the note and let's pick up the figure that we've calculated. Your direct labor cost was calculated at 737,300. So again, simply taking it through to your production cost statement, direct labor cost, an amount of 737,300. Direct material cost plus my direct labor cost is what we call our prime cost. Prime cost obviously coming from the word primary cost. Primary meaning what went into the actual making of the product. Your direct materials as well as the people that manufactured the product itself, your direct labor. So prime cost, people, is simply another word for your direct cost. Okay, so all we're doing is we are adding up these two direct costs. So let's get our calculators out. Okay, so our direct cost or our prime cost, 952,700. We are then adding 737,300 to get a prime cost of 1,690,000. So let's enter that in. Okay, prime cost, an amount of 1,690,000. Right, next item is our factory overhead costs. That's what we've just calculated in the previous question. So let's go back to that. Our factory overhead cost was an amount of 677,000. So again, simply taking it through to your production cost statement, factory overhead cost, an amount of 677,000. Okay, right, we can now calculate our total cost of production. Total cost of production, people, is simply our prime cost plus our factory overhead cost, or it's our direct material cost plus our direct labor cost plus our factory overhead costs. Those three costs that I spoke about right at the beginning. So let's now add, or let's calculate our total cost of production. Okay, we've got our prime costs calculated already, so we're simply adding on 677,000 to get our total cost of production, 2,367,000. So let's fill that in. Just want to change the color of my pen there. We are going to record our amount of 2,367,000. Okay, right, almost done. We now have our work in progress at the beginning of the year, which we're going to add. Work in progress at the end of the year, which we're going to subtract, and that will give us our total cost of production of finished goods for the year. So let's start with work in progress at the beginning of the year. We're going to our info, and it's right at the top, opening balances. Work in progress stock at the beginning of the year was 158,000. So let's take that amount through. So we've got our work in progress at the beginning of the year, 158,000. Let's just check that, people. Okay, 158,000, correct. Okay, so let's add our work in progress at the beginning of the year. So plus 158,000 to give us an amount of 2,525,000. So let's enter that in. So we've got an amount of 2,525,000. Right, we now need to subtract our work in progress at the end of the year. So let's now go to our information. Work in progress at the end of the year. Okay, there we go. closing balances on the 28th of Feb, in other words, at the end of the year, work in progress stock, and it's not given to us. Okay, don't you guys hate that when something is not given to you? Right, remember people, if it's not given to you, then we obviously need to think a bit, think out of the box. How am I going to calculate my work in progress stock at the end of the year? So let's now go to our answer sheet and let's just try and work this out. So we've got work in progress at the end of the year, which is not given to us. I'm going to call this X, it's unknown, which means my total cost of production of finished goods, I also can't calculate this, so I've got two X's. Whenever you've got two unknowns, guys, remember you need to try and calculate one of the unknowns. So if I can calculate my total cost of production of finished goods, I can then easily calculate my work in progress at the end of the year. Now let's go to the last bit of information that was given to us in the question that we haven't used thus far. Okay, so back to our question. The last bit of information, people, because we've used everything except for the following. Okay, information F. During the year, 20,000 pairs of shoes were manufactured. So, according to this info, we've manufactured 20,000 pairs of shoes. The shoes are sold at a markup of 65% on cost, and then I've got the shoes are sold at 198 Rand per pair. Right, so taking this information into account, how can I use this information? I know that I've manufactured, or the business has manufactured, 20,000 pairs of shoes. We are trying to calculate what is the total cost of production for the year, the cost of production in terms of your finished goods. So this is my units that were manufactured. I'm trying to calculate the actual cost, the Rand value. So if I take my units and I multiply this by my cost price, in other words, what did it cost me to manufacture one pair of shoe, I will then get my total cost of my finished goods, the total cost of shoes that were manufactured. So the key to this, grade 12s, is let's see whether we can calculate our cost price. From the information that is given to me, I am given selling price per unit, which is 198 Rand, and I'm given a markup of 65%, which means I can obviously calculate my cost price. Yes, I'm going back to your grade 8 accounting, calculation of cost price. So let's do that. Let's calculate your cost price. Cost price is equal to, remember you did this in grade 8, selling price times 100 divided by 100 plus my markup. So if I take 100 plus 65, I'm dividing by 165. So let's get our calculators out. Let's work out that cost price. Okay, so we've got a selling price of 198 Rand. We're multiplying this by 100 and we're dividing this by 165 to get a cost price, people, of 120 Rand. That's how much it costs the business to manufacture one pair of shoe. That is the cost price. So we've got our cost price. Let's just extend that page there as an amount of 120 Rand. Right, all I have to do now, my 20,000 units times my cost price of 120 Rand will give me my total cost of finished goods. So let's get our calculators out again. And on our calculator, all we're doing, guys, is taking 20,000 times your cost price. So let's just clear that. 20,000 times cost price, 120 Rand, to give us a total of 2,400,000. Okay, so let's just write that down. We're getting an amount of 2,400,000. 25,000. And remember guys, this is my total cost of finished goods. So let's go back to our answer sheet. Total cost of production of finished goods was what we just calculated. Show your calculations in brackets. We took the 20,000, we multiplied it by 120 Rand to get, let's just erase this X quickly, to get an amount of 2,400,000. Right, all I have now, grade 12s, is 1x, and it's very simple for me to calculate this. This is the value of your finished goods. Okay, the total cost of production of finished goods. This is obviously your, after I added my work in progress at the beginning of the year. So all I'm doing, people, is I'm subtracting the two to work out my work in progress at the end of the year. In other words, goods that still need to be completed. Okay, so let's get our calculators out. Our total value of goods that were in production, 2,525,000. We've obviously completed 2,400,000. which means work in progress at the end of the year still needs to be completed, 125,000. So let's get that X out and let's fill it in, 125,000. And remember guys, this must be in brackets because it's obviously closing stock still needs to be completed. Okay people, right, almost done with this question guys. We've done the production cost statement. We're now moving on to our calculations where we're going to be looking at break-even cost. So let's move on. Right, our next question, you are provided with unit cost and the break-even point calculated for the past 2 years. So they've given us the break-even point, it's already calculated. And we've got unit cost for the past 2 years. So we've got 2010. I'm just going to remind you guys again, this is the current year. And then 2009 is our previous financial year. Raw material cost per unit from the previous year. Let's start with the previous year. 54,000, sorry, let's say that one more time. 54 Rand and 30 cents. It's now dropped or decreased to 48 Rand and 30 cents. Direct labor cost per unit, it was 51 Rand 70 cents, and we notice it has also decreased, it's also dropped to 37 Rand 38 cents. Our factory overhead cost per unit, this has increased. Let's just look at it in a bit more detail. 2009 it was 30 Rand 25 cents. It has now gone up. It has increased to 34 Rand 32 cents. Now remember guys, if we add up these three costs, we're going to get our total cost or our cost price per unit. And remember, we already calculated that. It came to an amount of 120 Rand. Okay, so we had 48 Rand 30 cents. We are adding 37 Rand 38 cents. And then we are adding 34 Rand 32 cents to get my cost price of 120 Rand, which is obviously the same amount, the same cost price that I previously calculated using the selling price and the markup. Right, next bit of info, my break-even point is given to me. 19,548 units must be manufactured to break even in 2010. 2009, it was 11,300 units. So the break-even point has somehow increased. It's gone up. And then number of units produced, 2009, the business was making or manufacturing 24,000 pairs of shoes. In 2010, it has dropped or it has decreased to 20,000 units. Right, let's go to our questions and let's attempt answering them. The first question on this calculation on these ratios that were given to us. Explain whether Fatima should be concerned about the break-even point for 2010. Quote figures to support your answer. Right, guys, I mentioned right at the beginning that I'm going to explain break-even point when we get to the actual question. Let's now take some time to recap on break-even. Now, remember, at the point of break-even, the business is not making a profit, nor are they making a loss. They are breaking even. In other words, if we had to put out a formula or write a formula for this, it simply means that at this point of break even, my income is equal to my expenses. In other words, there is no profit at this point, no profit, nor is there a loss. Income is equal to my expenses. That's what we mean by the point of break-even. Now remember, at the point of break-even, there's obviously no profit, no loss. But the moment the business starts manufacturing above the point of break-even, so if, for example, the point of break-even is 20,000 units, the moment the business starts manufacturing 20,001 unit, it's obviously above break-even point, the business automatically will start making a profit. So the moment, in order for the business to make a profit, they have to exceed the point of break-even. So you've got to exceed your break-even point. If the business, however, is manufacturing at a point that is lower than that break-even point, so if our break-even was calculated at 20,000, and if we are manufacturing 19,999 units, it's one below the point of break-even, we are making a loss. Okay, you guys understand that. It's a simple concept. The moment I manufacture above break-even, I'm making a profit. The moment I manufacture below break-even, I am making a loss. So this question is asking us whether the owner being Fatima, whether she should be concerned about the break-even point for 2010. So let's go to our info above and let's inspect. The break-even point is 19,548 units. The business is producing, number of units produced is 20,000 units. So immediately ask yourself, is this above break-even? Yes, it is. It is above break-even. Anything above break-even means that the business is obviously making a profit. So should Fatima be concerned? The answer is no, guys. She shouldn't be concerned because she's obviously manufacturing more than break-even point. Hence, she will be making a profit. So your answer in this question should be no, she should not be concerned. And the reason being, the business is manufacturing above break-even point. And remember, the question wanted you to quote certain figures. Guys, I know I'm obviously abbreviating here, but I want to try and complete this question. So if we look at the figures that we're going to quote, the break-even point for 2010 is an amount of 19,548 units. So 19,548 units, while the business is producing for 2010 20,000 units, and it's obviously above the point of break-even. So she shouldn't be concerned. Okay. Right, let's move on now to the next question. The next question, they are now asking us, give a possible reason other than price changes for the above or for the change in each of the unit costs provided above. Unit cost, remember guys, we were given raw material unit cost or cost per unit, direct labor cost per unit, and our factory overhead cost in unit. So what they're simply asking us is give a reason for the possible changes from 2009 to 2010. So we've already established that direct material cost per unit decreased, direct labor cost also decreased, factory overhead cost on the other hand went up, it increased. So let's now look at a possible reason other than price changes. So we can't give price changes as our reason. Let's start with our raw material cost per unit. It has obviously decreased, and we now need to give a reason as to why it would have decreased. Now remember guys, if I'm going back to my chocolate, okay, back to the Aero chocolate. Milk goes, one of the items that would go into the making of this chocolate would be milk. Now, what would happen if some of the workers spill a bit of milk? In other words, they waste certain raw materials. Obviously, the raw material cost per unit will then increase. It will go up. But if they use it efficiently, there is absolutely no wastage. So if, for example, we're using, again, guys, I'm just estimating a cup of milk to make this chocolate, and we use exactly 250 ml, a cup of milk, to make this chocolate. We're not wasting, we're using it efficiently. Our raw material cost per unit, because we're being so efficient, we are not wasting, it will decrease. The cost will go down. So one of the possible reasons, as I've just explained, there could have been no wastage of raw materials, and it could have been used efficiently. The raw materials, in other words, no wastage, used efficiently. Right, let's move on now to your direct labor cost per unit. Okay, I'm just going to change the color of my pen there. Why did the direct labor cost per unit decrease as well? Direct labor obviously refers to your workers. So again, 51 Rand 70 cents, it has decreased to 37 Rand 38 cents. A possible reason for this decreasing, people, is that your workers are probably working very, very efficiently. They are not wasting any time. There could have been absolutely no overtime, and as a result of that, your direct labor cost per unit has decreased. So instead of the workers taking their 5-minute smoke break or walking around, they decide, okay, I'm coming to the factory, I'm coming here to make chocolates, so I'm not going to waste any time. I'm going to work during that 8 hours that I should be working. I'm going to work during that time. Right, so again, people, one of the reasons, and I know I'm repeating myself, but let's just say it one more time, direct labor cost per unit decreased due to workers being absolutely efficient in terms of the way that they are working, and there could have been absolutely no overtime. Okay, right, let's now look at the final unit cost, which is my factory overhead costs per unit. Again, people, if I inspect 2009, 2010, there's obviously been an increase in my factory overhead costs per unit. One of the reasons why this could have increased, remember, you had water and electricity that formed part of your factory overhead cost. We also had depreciation, and remember, we purchased an additional equipment or something additional in terms of the plant itself, and as a result of that, we had to provide additional depreciation. So that could have been one possible reason why this cost increased, or there was a rise in your factory overhead costs per unit. So let's write it down. Depreciation was provided for additional equipment. Okay, that could have been a possible reason. Another possible reason, guys, for this increase, your water and electricity. There could have been some kind of wastage in terms of water and electricity, leaving the factory lights on when there's no one working in the factory. That could have increased the water and electricity account, and as a result, your factory overhead cost per unit would have also increased. So there could have been wastage in terms of water and electricity, and that could have resulted in our factory overhead costs per unit increasing. Guys, another thing that we also need to consider in terms of our factory overhead costs per unit, in other words, why it increased, is, let's go to that point, the number of units produced. Now remember, people, if your number of units produced, like in this case, if it decreased or reduced, okay, so we were manufacturing 24,000 pairs of shoes, we've now manufactured 20,000. There's obviously been a drop in terms of the number of units produced. Every time your number of produced items reduces, drops, automatically our factory overhead costs per unit will go up, it will increase. So this is another factor, a third possible reason that we could consider or that we could use in terms of our answer. Right, people, we've come to the end of this question on the production cost statement. Remember, guys, the more you practice, the better your accounting results, the better you will do in this section of work. From myself, good luck for your prelims, good luck for your finals. Keep on practicing, people. God bless. Take care. Until we meet again, goodbye.